The Consumer Confidence Index is a key measure of how optimistic or pessimistic households feel about the economy. For more on this, let's bring in financial markets analyst Mitch Firestein and partner and co-founder at Flynn Zito Capital Management, Doug Flynn. Mitch, let's go to you. We hear a lot of good vibes on the economy coming from the White House, but why is consumer confidence down heading into the holidays?
I think that there's been a lot of positive signs in the stock market. The stock market is actually booming. It's been very volatile. Volatility has returned to all the markets. Consumer confidence is down because the AI boom has caused a bit of a bubble, and that's what's ignited the economy and made numbers look better than they seem. I think the employment numbers were pretty dire, and that's why the Fed will have to cut the discount rate again in December, which I've said from the beginning. They were behind the curve on it. They've got to catch up, and a couple cuts coming early next year as well.
Doug, the market really has been a roller coaster, and there has been this talk of the AI bubble. What do you think are the biggest concerns about the economy right now?
You got a number of concerns, mostly I think having to do with, certainly to the confidence number, just the jobs picture. It's not so much that new people are losing their jobs. That's not it. It's the continuous jobless claims numbers. If you look at them, they've been rising, and we're approaching 2 million. And what that means is that once you lose your job, it's harder to find a replacement job. And so I think that's weighing into people's concerns about the economy. And then also we're looking at not a very good picture, in fact, a pretty weak picture for graduating people from college, and that job market's not looking good. So, people on the lower end are really having a tough time. It's getting masked by the people on the higher end who are still spending. Mm-hmm. And so, but when you look in there, there are some points that they really do need to focus on lowering rates to get that job market into a better situation than it's been. Inflation may be a little bit more under control, but jobs are still weakening, and they need to attack that.
Mitch, affordability, a major concern for Americans, and I've made the case that people can't really rely solely on Washington to solve that problem. It's a state and local government problem, and it's a personal choice problem as well. But what should Trump and the White House focus on if you were giving them some advice?
Well, if I were to give them advice, I would say the best thing they could do is go after the banks and say, hey guys, we're putting a cap on the interest rate you can charge consumers on credit card debt, because credit card debt, if you look at the Federal Reserve's recent report, all-time high. Put a cap. The banks borrow from the Fed at 4% or less, and they charge up to 30% interest to clients who are jammed and have to put stuff on credit cards. If you bring that rate down, it's going to help. The Federal Reserve has to cut rates as well and keep it going to put some grease in the wheels of the economy. So the credit card thing.
All right, guys. I agree with that. I think that's a great idea. Guys, I'm sorry, we've got to cut it short because of our breaking news. Mitch Firestein and Doug Flynn, thank you for being here, and have a happy Thanksgiving.
You too.